But let's get in Hemant Rustagi of Wiseinvest Advisors to tell us about the personal finance segment. Hemant, hi, welcome to the show. For the first time, India's top banks, insurance companies, pension funds, mutual funds and small investors will come together to trade in corporate bonds and government securities under a dedicated debt segment, which will be launched by the stock exchanges very shortly. Hemant, in theory, this will provide small investors perhaps a platform to buy corporate and government securities. But can you tell us in practice how advisable or how feasible would this be going ahead?
Well, let me begin by saying that this certainly is one of the biggest steps that has been taken to deepen the debt markets in India so far. We've seen in the past also a number of steps taken in this direction, but they've not been successful. But this time around, my feeling is because of the participation of the banks as well as the insurance companies, which are big players in both corporate debt as well as the government securities, I think the liquidity will definitely get a boost. But I think one of the major factors or objective of introducing this dedicated debt segment is to activate the retail segment or allow retail investors to participate in the debt market in a very transparent manner. If you look at the retail participation today in the debt market, it's very, very low, and investors often struggle to find out as to which security to buy and where to buy. And also one of the factors which has kept retail investors away from the debt market so far has been the low liquidity. So I think with this initiative, what will happen is that the retail investor will be able to buy and sell publicly issued securities in a very simple manner, and both the price as well as the security will be visible to them. The dedicated debt exchange will actually list out all the securities that are basically listed on it, and also will provide a screen-based trading for order matching as well as for providing quotes. So clearly, I think it's a good news for all those individual investors who would like to participate in the debt market. But my guess is that it's the HNI segment which will initiate the process. As far as the retail investors are concerned, my advice to them would be to increase their awareness level before taking the plunge. The fact is, we all know that debt market is complicated, in fact can be more complicated than an equity market, and the fact that there is an inverse relationship between interest rate and the bond prices, investing directly can be a little complicated, in fact quite complicated for retail investors. So to my mind, I think the right starting point for retail investors would be to look at debt funds, because these are debt funds which are diversified by nature, and also give an opportunity to retail investor to buy into a portfolio which has a mix of corporate debt as well as government securities. And also the fact that they have to look at only one price, that is the NAV, rather than looking at individual prices of number of bonds in the portfolio. Once they become experienced, once they understand the nuances of investing in the debt market, we will definitely see more in retail participation in the dedicated debt segment. But I think it's going to be a slow process. But of course, in the interim, they will definitely benefit by way of increased activation of basically the debt market through their investment in the debt funds.
Hopefully, we will start tracking these debt instruments. A Reliance AAA or an HDFC or a PGCIL or an REC bond hereafter. And hopefully, there'll be a bond index sometime soon. Let's take a break. On that note, we are coming back. There are viewer questions. Okay, let's concentrate on the personal finance segment, and a viewer calling us from Pune, Ravi Vivedi is calling us. Go ahead, Ravi ji, what is your question?
Yes, ma'am, I am Ravi Vivedi from Pune.
Yeah.
I want to invest 4,000 to 5,000 per month for 12 years, and I want the amount is around 15 lakhs.
Okay.
Where I invest.
15 lakhs in how many years? You have said that it is for your child's education. So I should assume you want it in 15 years?
12 to 15 years.
In 12 to 15 years, you will put in about 60,000 rupees a year, correct?
Yes, ma'am.
Okay. Hemant, what's your call?
Well, I think there are two important factors here. One is that the time horizon is 15 years, and the fact that also the important thing is that the money will be invested on a monthly basis. So considering these two facts, my advice to Ravi would be that he can look at a well-diversified equity fund because he wants to create a corpus for children education. The two funds that you can consider investing at this stage is one is ICICI Focus Blue Chip, which is a pure large cap fund, and also IDFC Premier Equity, which is primarily a mid cap fund but has some exposure to large cap, and both these funds have been doing very well consistently. If I assume a return of around 12% over a period of 15 years, I think, Ravi, you should be having a corpus of around 24 lakhs, which is definitely going to be more than what you're aiming to achieve after this time horizon. But I guess when you talk about 15 years, maybe the requirement itself will be more, so you need to also consider inflation before setting your target. But I think with this investment in these two funds, he should be able to achieve this target.
All right, thanks a lot, Ravi and Hemant, for joining us in this Q&A. And a note to you viewers, remember